Hello everybody, how is it going today? It is now February 20th, it's about 1 p.m. Central Standard Time, and we're doing an update on Bitcoin. Let's take a look at Bitcoin and see what it is doing. But before we talk about Bitcoin, I want to talk about ending diagonals, okay? Ending diagonals are some of my favorite patterns to play for a good reason. Now let me explain to you guys what an ending diagonal is. Well, first of all, it's a special type of wave, and it only occurs, or it primarily occurs in a fifth wave position. And it usually happens when the preceding move has gone too far and too fast, put it that way. And a very small percentage of ending diagonals appear in the C position for ABC formations. And they also appear it can appear on the fifth wave going up and also the fifth wave going down. So I'm just going to draw some Elliott wave examples of how fifth waves can look. Let me give you guys an idea. So let's say we were going up, and this is an impulse move up rather than a corrective pattern. We're going to talk about Elliott waves going up like this. Just something like that, all right? And usually we would find a wedge, and there's many different terminologies that I'm sure you guys are all familiar with. So this right here is an ending fifth wave diagonal that can go something like that. And yes, the overlap can absolutely occur in an ending fifth wave diagonal. Okay, so please don't discount that for a moment. Not only that, guys, the third wave can actually be a lot shorter than the other waves in an ending fifth wave diagonal. It doesn't happen often, but usually the first wave is longer than the third and the fifth wave. So sometimes we can even see something like this. So that can happen quite often as well. And it happens when two converging lines that are sloped upwards and it ends up breaking down. Now, another term that you guys might be familiar with is this is called an ending fifth wave diagonal. And there are other diagonals as well, such as leading first wave diagonals. And we'll go over both the bearish and the bullish views as well for how these are formed. So usually what happens is this breaks down later, okay? It breaks down like this. But before it happens, what usually happens in most cases is, excuse me, we got to remember that this is always a fight between the bulls and the bears. One is always trying to trap one is always trying to trap the other. And we're trying to fool the public. So the main goal, in my opinion, is that we are trying to take each other's money. We got to remember that this is one of the fiercest competitions out there, and there's a very limited supply of capital, or money rather. And where does the profit come from? Every time we profit, we're literally taking someone else's money. We're taking money from the market, right? And every time we lose, we're giving away our profits to someone else. So it's distributed equally like that. So if we talk about ending fifth wave diagonals, what I see often is a throwover where it goes up like that and then it comes down. What the bears will try to do, or like to do rather, is they'll create a lot of these leveraged walls in a margin position to drive up the price up. Or not even in a leveraged position, right? They'll maybe purchase it on an exchange balance, for example, create these massive walls to drive up the prices. And what they'll like to do, is they'll stack up these leveraged margin positions to short. So let's say you're stacking, right? Let's say you're stacking right here to enter short, right here, right here, right here. So you've now got yourself into 4 big positions. It's what a lot of my friends and I used to love to do with smaller market cap coins. That is a fact. So what we'll do is we'll create these walls, and then as soon as we see these spikes of greens where buy orders, and we're trying to create basically an artificial demand. So what you're doing is you're boxing yourself in with, say, a price right over here. So you box yourself in with the price over here with the massive exchange balance, right, to drive up the prices. So what people would like to do is they would try to drive up the prices to go up, right? So they're seeing, wow, there's an artificial, well, to me, I see it as an artificial demand. So these people are creating these bids, but they might be artificial, right? It's just to drive up the price. That is the mechanics of a throw over. So when people are dumping to them in that red line there, they're also in a long position. And because they're in a long position, because people are selling to them, right? And they think that, hey, this wall's actually going to hold, so people will start buying, and they'll try to chip away at this first line. We'll call it the blue one, okay? And then regardless of how many are there, they'll eventually remove this, right? They'll eventually remove it, and they'll drive up the price even more by moving up to this position. And then all of a sudden you're seeing massive spikes because they can't lower the price at all since these walls are there. So eventually what they like to do when they see spikes of green, because it can't go down since they're boxing other players inside, right? When they see these spikes of greens, what they'll do is they'll remove it really quickly, right? So this way, this one actually ends up getting filled, and boom, they'll put it right back there, right? And they'll slam the market right back down. And they can do this because they actually are in a long position as well, we have to keep in mind, okay? So when they're in a long position, they're accumulating longs, right? They're accumulating longs, but because people are buying up greens at the same time, right? It now gets removed temporarily, and they want their short positions to be filled at a higher price. And because it's being filled at a higher price now, their base price for dollar cost averaging is much higher now for their shorts, right? And then they'll use their exchange balance to, boom, slam the market right back down. And they'll keep doing this for a while. Eventually, you know, they might throw it over to even over here. And then eventually, you know, they're going to drive up the price to maybe to this one right over here, which I'll now make a blue line. And because people are still dumping to this red line right there, because they're dumping, they're also in a long position. Then temporarily, they'll remove this one right there quickly. And then now they're getting it filled at an even higher price, right? And then what they'll end up doing is, boom, they'll slam the market back down like that. And they'll actually keep driving the price lower and lower, and they'll dump their long positions. And what this does is it catalyzes a process of the downtrend, because they have now filled their long positions, or sorry, they've now filled up their short positions with a very high base price. So for dollar cost averaging, they're getting a really high price. And eventually what they'll do is, with the long positions that they've accumulated, they'll keep driving the price lower and lower and lower, right? And not only will they close their long positions, but because they're margin shorting as well, obviously, using leverage, they'll also market execute to drive down the price, right? So this is what usually happens in a throw over, and it happens very, very, very often. And let me show you guys from a literal textbook, okay? So let me pull up this textbook to show you guys some definitions of how they describe ending diagonals. So for example, this is an example right there that's very classical, okay? So it usually appears in the C position right here, C position or the fifth wave. Ending diagonals take on the shape of a wedge, where two converging lines with each subwave, including waves 1, 3, and 5, are subdivided into 3. And now what it also says here is that it's the only 5-wave structure in which the direction of the main trend, where wave 4 almost always moves into the price territory of wave 1. So for the people that are very strict on these rules, such as, oh, wave 4 doesn't actually retrace into the territory of wave 1, you guys got to really read these textbooks of yours and really, really learn a lot more. And ending diagonals, two converging lines, right? And it's usually divided into 3s is what they call it. And one very important thing to make note of is this right here, okay? Let's see if I can remember where to find it. Fifth wave diagonals often end up with a throw over is how they describe it, a brief break in the trend line connecting the points of waves 1 and 3. This happens because of that process that I was describing to you guys earlier. And now a rising diagonal, excuse me, a rising diagonal is bearish, and it's usually followed by a sharp decline, retracing at least back to the level of where it began. So these right here, and the reason why it retraces back to where it began is because wave 4 is now the actual support, right? What we find in Elliott Wave is that a support region is very commonly found where the wave 4 territory is, because it acts as a very hard support. Does that make sense? Okay, I just wanted to get this out of the way. Now, I'm not saying that we're about to do this at all. I'm just pointing out these different scenarios that could be a possibility. And now you can also get an ending fifth wave diagonal as well, right? These happen quite often. So this will go something like 1, 2, 3, 4, and something like this. And now, whoops. So this can happen quite often as well. And I'll tell you guys the name of how they're called later. So the third wave, as mentioned, it could be the shortest wave. Okay, guys, it could absolutely be the shortest wave. Wave 1 and 4 could absolutely overlap as well. All of these things happen. Wave 1 could be the longest wave. So wave 3 is often the longest, right, of an impulse wave of the main primary wave. But when it comes to subwaves, it can actually be very, very different. Now, this one here is called an ending fifth wave diagonal as well, but the traditional name that you guys might know it as is a bullish falling wedge, right? a bullish falling wedge. And the other one, guess what it would be called? It'd be called a bearish rising wedge, right? It's a rising wedge that's bearish. And these used to be some of my favorite patterns to play, I kid you guys not. Okay, and I want to do a technical analysis on Bitcoin from the beginning, pretty much, or from here at least. So let's say we're talking about Elliott wave count. There's no disagreeing that that's about wave 1. This is wave 2, 3, excuse me, and we don't know where 4 is. This one is arguable, okay? That one is arguable there, and for all the professional Elliott wave traders, I know that you guys are probably going to be thinking, okay, well, does he really know his stuff? So I just want to make note that this could very well be as well wave 2, okay? And I know the annotations are off. They really need to fix the way Elliott waves are annotated on TradingView. So this could be A, B, and C, just like that, okay? Now, a lot of other people will argue that that's A, B, C that happened in there already, okay? Right here. So a lot of people will argue that. Some people will argue that this is it right here as well. The way I think it is this one right here, or like that, okay? Wave 1 could have ended there, and then we get the ABC I described earlier, or right here. But regardless of which one it is, it's not this one, that's for sure. I disagree with that one. I do agree that this is wave 2 territory right here. And what surprises me the most is the retracement, okay? This is actually my favorite one right there. It surprises me that this one retraced about 382 region right here. And then this one over here retraced barely anything, guys. It retraced not even 382. So that definitely is suspect to me. And it makes me wonder what is going on right now. And we also know that that's pretty much the wave 3 target because it did make a perfect extension. Check that out. It made a perfect one-to-one extension. So anyone who bought on this dip here, right? Let's say, you know, let's say you're smart money and you guys buy on the dip, all right? You would have bought it right around there near the 382 region, or when it bounced above the 55 EMA there on the 1-hour chart, and boom, you're entered into a trade and you would target at least a one-to-one extension. And the reason why you target a one-to-one extension is simply because wave 3 is often the longest and it is never the shortest. We barely see, actually we never have seen wave 3 shorter than wave 1 in Bitcoin. Never have we seen it. And another characteristic about Bitcoin is that the 5th wave does not usually become too extended as well. Okay, so now that we can agree that this is possibly wave 4, right? Some will argue that this is not wave 4. Some will argue that this is it right here where we get a very different type of C corrective pattern, right? Something like that. You know, that's a possibility as well, although I have to discount that for now, okay? I've got to assume that, okay, this one just wanted to retrace that much. And some people will argue that, okay, that's now an ABC like this in here as well, and we get a 5th one way up there to the 12,500, 1,300 range. So that is a possibility as well. So the way that I'm seeing this though is I will just assume bullishness because I've got no other things to assume right now. And from what I see, and I'm not saying that this is any time right now, I'm just merely pointing out what I see, right? What I do see right now is a squeeze. So this is suspect to me. I've been waiting for something all day to make sense. And I'm going to consider my trend lines and make sure I consider some bear traps. That's how I like to draw my resistances and supports. I will consider some bull traps and some bear traps. And I won't draw it on the very extreme ends like this, where you're only going from wick to wick, okay? I'm not really a big fan of that because then it becomes too what's the word? You contain it too much. That's a good word. It's much more contained than I would like to see it. And because it's too contained, I don't see any type of bull traps or bear traps, and you're not even factoring in any of those possibilities, right? So the way I'll draw it is between this wave right there going up and right here as well. That looks like a very reasonable one to me. Doesn't it look like to you guys? And this one is also arguable, right? When we do a basic count on this wave coming down, yeah, some people would say this is 1, 2, 3, 4, and 5. It definitely looks like that, right? But if you zoom into a higher time frame, we could be asking ourselves as well, hey, is this 1, 2, 3, 4, and 5 like that? And there's a 5 wave somewhere in there as well. So if that was the 5-wave count according to a lower time frame, we ask ourselves this question. Could this possibly be ABC right here that happened already? ABC, where it just simply didn't make an exact one-to-one extension? Possible? Now let's entertain this idea of an ending 5th wave diagonal, okay? So we're gonna draw this as 1. We're gonna draw basically this as 2. I'm gonna actually get into a better time frame here. Is it possible that this is 1, where we definitely made a touch? Somewhere there's 2, this is somewhere 3, this is somewhere 4, and there's a 5th wave somewhere up there, right? Interesting. So I can't help but think that the top is somewhere very near, guys, like around 12,000, maybe 12K, maybe not even 12K, maybe 12,250. But just based on the characteristics right now of this entire wave, where we do have 1, 2, 3, 4, and a possible 5th wave somewhere up there, perhaps 12K, I can't help but think that we're getting near the top, maybe a few $100 more, right? And I also want to make note of this trend line, this parallel resistance that we've been talking about for the past few technical analysis videos as well. So this is not a prediction video, it's more like just pointing out some facts and some theories, right? What we see right now is that it's definitely reaching this trendline resistance when I go from the extreme ends of all the candles touching just the bodies at least. Oh, I keep doing that by accident, I'm sorry. Right? So now I'm literally touching this one, and this one right here as well. And the good news is we're above the 55 EMA, but we're not exactly closed above it yet on a daily in terms of where the moving average of the 55 is below the 8, 13, and 21. So we are reaching a critical resistance right now as well. This is a very good lower channel support. Now let's go to a higher time frame as well. If I went to a higher time frame, what I notice right here is it's still in a channel, guys. It's still in a channel, a beautiful channel to be exact. See, a lot of people would draw like that, but not me, guys. I don't draw it like that because I like to consider, once again, some bull and bear trapped regions. It just is not fair to not consider any of them. And what we see is it's absolutely trending, guys, in here, okay? Channels break. Trust me, guys, channels break all the time, okay? And I can't help but think that this is indeed 1, 2, 3, 4, 5 coming up somewhere in here. I cannot see it getting higher. Let's just say we call this 3, 4. Look at this, right? So we ask ourselves, is it actually going to break this channel resistance right now? Interesting. Is it going to break the channel resistance and then finish another extended wave perhaps, which doesn't really happen often for Bitcoin, right? So if I take my channel resistance, if I actually take my support line right here as well, if I actually take this as well, what I see is it's definitely squeezing into a very valid point right now. So I can't help but wonder if this is the top that's coming in very soon, right? Very good questions to be asking. So what we see once again is that, is this a possible count? Is that a 1? Is that a 2? Is that a 3? Is that a 4? Is there a 5th one somewhere up there? Let's look at some of the indicators to see where we're at right now. Let's take a look at the 4-hour chart first of all. The RSI is not getting higher high than it. We're not quite there yet. This one's only, oh guys, take a look at this as well, right? We're seeing bearish signs of divergence already. Even from here, on the extreme ends, even right here as well, on this end. The histogram is actually getting a series of lower highs. It's higher here, but it just cannot break it. And you can draw bearish signs of divergence anywhere. Am I bear? No, I'm definitely not. This is, I'm not even in the position right now at all. I'm just kind of waiting around to see what's going on. Does the 3-hour chart want to come down? We did get a slight tick on there on the histogram. Let's see what the 2-hour chart says with 45 minutes to go. The 2-hour chart is showing a bearish spinning top already here, okay? A bearish spinning top, almost like a double tweezer formation here. if this body was longer, you can call it a tweezer top. This one was a fairly bullish candle in my opinion, but the next one that's formed with about an hour and 15 minutes into the candle, it's definitely a bearish spinning top. Here, we're seeing a series of rejections on the upside because we're reaching that channel support, right? We're reaching that channel support with certainty, the one that's going very, very long. Now, we broke out of this one pretty much, but the question is, will it end up being a bull trap? So here, we got a series of rejections. Here's one rejection to the channel support. Here's an indecisive doji as well. And then the next candle is another rejection above this trendline support right there. And we're getting a bearish spinning top. We're not really breaking into massive bullish territories either, right? This is what a bullish territory looks like. Maybe around there for the 1 hour chart where we're breaking at least into 70s and 80s. But right now, we're not really breaking into anywhere, guys. We're just double topping here on the 45-minute RSI. So it's very suspect. Am I going to go into any position? Maybe soon for a short. I've been waiting kind of all day. Yeah, on the 45-minute chart, RSI doesn't show too much. On the 45-minute histogram MACD, though, it is doing this like I mentioned already. Is this going to snap back down? 30-minute chart histogram, a series of lower highs in the previous one already. And on the 30-minute chart, we are seeing massive series of rejections. Are they inside candle bars where it's going to make another wave? Possibly. What I think is it might even get to the very higher end of this /wedge/ channel. I mean, we're looking possibly at 12K. Is it a good time to enter? Probably not, because your risk to reward ratio is pretty bad, I would say. Where's your stop loss going to be? And where's your target going to be? I don't see a risk to reward ratio of higher than 1 on here. On the 15-minute chart, we're downtrending, but you know, not a lot, right? There's still a lot of ways to go. So it's more so me just playing I Spy with my little eye this game. So what do you guys think? Is this bearish? Is this bullish? Are we almost done our count? What is going on, right? If I count 1, 2, 3, 4, 5, it's almost as if 5 waves are now officially done. So my bias is pretty neutral, I would think. I just wanted to point out some signs based on Elliott Wave, and it was more like a lesson video as well to show you guys what an ending 5th wave diagonal looks like when it's drawn from an Elliott Wave perspective. And what a lot of people know it as is actually, what's the term again? I forgot. Rising bearish wedge. Interesting, right guys? And we have actually ticked about $120 already from this recent high. So what am I waiting for? I mean, I'm waiting for a possible breakout with conviction outside of this channel, first of all, but we're clearly bouncing out of it. I mean, if it broke over here, I'd be very bullish if it stayed up there for a long time as well with a lot of volume. But even on a 15-minute chart, we see the moving average of the volume that's going to slightly downtick soon. So I can't help but be, I'm still neutral, believe it or not, but I might be leaning towards bullish tomorrow, or sorry, bearish tomorrow, because I do believe that it's going to end up correcting. If it doesn't correct for some reason, okay guys, and we just end up getting a massive 5th wave, which is possible as well, and if we actually close above the 55 EMA moving average with the 8, 13, and 21 supporting all of them below as well, but more importantly, the 55 moving average supporting below all of them, then, and that could happen in 2-3 days, then I'll be very bullish. But for now, as it stands, I'm fairly neutral today, this exact time. But I do believe that a correction is going to happen sometime soon. It's just a matter of when, guys. It's honestly just a matter of when, and we just got to be extremely patient about it. So I just want to give you guys my thoughts with where I stand right now. I'm not going to be entering any position anytime soon because I just don't see a lot of opportunities. But soon, in terms of shorting it, yeah, I will be interested in that. Maybe in a few hours or maybe in a day, who knows? But the immediate term, I'm not really too interested in entering anything right now unless we break some critical support zones and EMAs as well. So all I can say is that there's not too many good risk to reward setups right now for swing trading and for day traders even, right? And I think right now the best thing for me to do is to just exercise caution. Caution really does go a long way. So anyways, I just want to share my quick thoughts with where we stand right now. I see an ending 5th wave diagonal just based on all the mechanics right now going on. And I can't help but think that it will break eventually. It's just a matter of how much longer is it going to squeeze into this triangle pattern right here. So these are my quick thoughts right now for an afternoon update on Bitcoin. I apologize if it wasn't exactly what a lot of people might have been looking for, but I just thought I'd give my quick notes on it. And I want to be very clear that I'm neither bearish nor bullish right now, as I've stated many times. I am not implying in the least that it's going to drop right now, okay? What I'm implying is that the end could be very near soon, and we should probably make note of it, especially for the people that are entering short positions. So other than that, I leave you guys with this. I digress. I would really appreciate an upvote on Steemit, and make sure you guys also like, subscribe, and share the material on YouTube and on Twitter as well. And just in case Tone Vase does actually look at this right here, because Tone, everyone calls him Tone, so I'll call him Tone as well. He actually replied to me on Twitter today. It literally made my day when he replied to me. I made a really funny joke. He's like, oh, you post all of your stuff on the scam site, Steemit, right? And Tone has a reputation for calling a lot. He's a very straight guy, and I love him. Nothing but respect for him, right? And I still have to throw him the occasional joke, right? In the previous video where I was talking about inverse cup and handle, I apologize for that. Someone actually asked him, is this an inverse cup and handle? I must have tuned in really late, so I apologize to Tone Vase in case he watches my video. So he was joking about, I lost respect for you a little bit because you post on Steam, right? So I said to him, good thing it's also posted on YouTube. Is that also a scam site? And he actually replied back to me. So funny. Oh, jeez. The inside jokes that goes on amongst the analysts in the community. Okay, anyways, I'll leave you guys with that. Yeah, no good risk to reward setups right now. I'm sorry guys to enter long. You guys missed your chance at 10,000, okay? You missed your chance or 10,300-ish. You missed your chance over here at 10,200 to enter a decent position. Other than that, have a great day guys, and I look forward to seeing you later. Bye now.